Welcome to our first update of the Stars PF. Now, for all the people who have not seen this video or are seeing this for the first time and have no idea what Star PF is, so on Jan 2nd, we made a public experiment. Okay, so I made a public experiment where I'll be investing in stocks around 10 to 11 stocks, and I want to see how that plays out for the entire 1 year. Now, I took a basket of 50 lakh rupees and I said I will not rebalance. I mean, I will not add more to it. So it'll be a 50 lakh basket because tomorrow, if it falls, I can add more and average it. No. So it's going to be a 50 lakh basket. And how I manipulate the basket, rebalance the basket, see how we can try beating Nifty index, Nifty 500 index, the small cap, mid cap index, and things like that. That is the plan with the Stars 2025 tracker. And we invested this on Jan 2nd. And on Jan 2nd, the market was looking very attractive because the market had just gone up. But there was something that none of us predicted after Jan 2nd is that after Jan 2nd, we saw a massive fall coming into the market. Now, before I show you how much the portfolio has fallen with respect to the index as well, let me actually show you something else. You will see the Nifty index right now. So let me just go zoom out to Nifty. Yeah, so this is where Nifty is, right? But this is very easy to see in hindsight. But when I was investing this, maybe on Jan 2nd, the market was, I think, here. So this was where I invested in the market on Jan 2nd over here. So obviously it looked like we were coming out of the consolidation. We were looking good. It just took a rebound from the support line, but then boom, right? The market fell down, but it's okay. It's the cycle of the market that keeps going up and going down constantly like this. So there's nothing to worry about. But more importantly, more than Nifty, the Nifty 500 index fell down by almost 15%. The Nifty mid cap index almost fell down by 16-18%. And small cap index, which took the maximum beating, which fell down to almost 20% from the high, not from Jan 2nd, but from the high. From Jan 2nd, it fell down, I think, around 12.5%. So everyone got affected a lot. And then we invested in our stocks as well, which also got affected as a byproduct, right? So for some people I know who are watching this, who are tracking this, were saying that you invested at the wrong time, the timing was wrong. So I want to tell you guys a very clear statement. In the market, there is no such thing as wrong timing, good timing, and bad timing. You can never predict the future. So how can your timing be good or bad, right? The market is going to do what it has to do. My job is to react to the market. So if the stocks fell down, okay, fine. How do we correct it? How do we change it? How do we make it look good? In fact, if the market goes up, it is not a great thing, because even if the market goes up, I have to rebalance the portfolio and understand what is good and what is bad, when to take profit, etc., etc. Right? So there is no such thing as a perfect market, and we've only finished 30 days of this experiment. We still have around 11 more days to go. So out of 52 weeks, 4 weeks is over, so we still have around 48 weeks to go. So no problem at all. And looking at the budget that just came out, that was also a very nice budget. So we also see the consumption cycle coming in. And on Jan 2nd, we made the entire portfolio in such a way that we believe that the consumption story will play in, right? And I said India was in a checkmate position, and India has to somehow either reduce LTCG, STCG, or give some rebate to the middle class to fuel the consumption, because consumption was dying in the economy. Now, if the consumption comes in, obviously discretionary, non-discretionary, everything will start going up. Saving will go up, spending will go up. Now, quickly, let's look at the Stars PF. And let's look at what has been changed. There has been one rebalance in the month of Jan, and I've updated all the rebalances instantly. The day I did it, the minute I did it, I've updated it in the YouTube community. For all the people who want to join it, please join the YouTube community for live updates. But let me tell you how it looks like from a last 1 month perspective. So these are the companies right now in the Stars PF. So we have not changed most of it. We've only changed one company. So we have Innova CapTab, which is in the pharma space, Zaggle, Anantraj, Varun Beverages, Kaplan Point, Prudent, 361, PGEL, which is also in the EMS space, consumption space, Nuama, Motilal Oswal, and Apar Industries. So these are the companies that we currently have. Now, the company that we removed also, I will show you. And these are the companies that we started on Jan 2nd. This was the market cap of all these companies. And obviously, you can see the market cap has now fallen down because most of them were also high PE companies, and most of them are in the mid cap and small cap space. Only Varun Beverages is sitting at the large cap space. And this is a company we recently rebalanced also. Now, if I come here, let me show you the percentage drop from Jan 2nd. And as you can see, the percentage of most companies have fallen down, and the maximum hit company is Motilal Oswal at 32%. Because if you remember, Motilal had multiple different problems hitting them. Yes, all the companies fell down. Like, for example, 361 in the same space, Novama also in the AMC space fell down. But this fell down 10-15% more because they had the Kalyan Jewelers problem. Their Motilal AMC, which is their mutual fund, had all the high PE companies like Zomato, Trent, Kalyan, and all of them started falling down. And when that happens, people think that the everything else will be bad. Now, coming to the results, we saw that 361 came out with good results. Even Motilal actually came out with very good result. Only that PAT looked bad because they had some treasury changes in that. But if you see the top line and if you see the growth in segment, it was good. The only result that was not according to my expectation was Prudent, because Prudent had a flat top line. I expected the top line to be more. Looking at the SIP inflow of September, October, November, December, I think Prudent should have had a better top line. And the bottom line I knew would be affected because the AMC houses actually changed the commission ratio. So that is something I predicted. Right, we're still waiting on the result for a lot of other companies, right? So Innova, CapTap, Pharma. So Pharma has been quite as a defensive space. IT has also been quite defensive, so no problem. Anantraj had a massive fall. If you remember, Anantraj fell down by almost 40% because of DeepSeek. Uh, I don't know, it was just a mad reaction to Anantraj, and Anantraj's data center, which is why the premium with Anantraj was there, mainly because it was a data center company, had not launched the data center yet. But obviously, the premium which was given to the data center went away quite drastically. And obviously, DeepSeek, people were assuming that if DeepSeek happens, then it's going to create a problem for data centers. But in fact, it's the opposite, because if there is more adoption of GPT, right, more adoption of LLMs, then the need for data centers, the need for cloud storage will all go up more, which people realized quite literally after that. And you will see Anantraj suddenly doing an up move, right? It's been doing a constant up move from the last 2 3 days. So slowly it will recover. But the only one that I would say got hit the most would be Motilal Oswal. And if you look at the impact on PF, right? Impact on PF, as in right now, my PF is down 21%, right? And this is actually a little more, and I'll show you that as well. But right now, it's down 21% from Jan 2nd. Again, I would not say it's bad timing, because it could have also been 21% up and you would have said, Shashank, why didn't you invest on Jan 2nd? So it's a catch scenario. So don't get into that. What we have done, the most impacted here is Motilal Oswal at minus 3% of the PF, and everything fell so fast that there was no scope to rebalance. Now, my biggest thing is when everything starts going bad and everything starts falling down, a lot of people panic and a lot of people sell. And I just look at the companies again. I look at the companies that are here. These are really strong companies, strong names, and I will only change them when I see a fundamental shift happening. For example, Prudent, I have seen a fundamental shift happening. The top line started slowing down and the bottom line started getting affected because of the management commission ratio. So this is something that I will remove in the next few days. I will do a rebalance, and when I do a rebalance, I'll update it in the community as well. But this is something I would remove right now. Now let's check what I've actually sold in the last 30 days. Right now, if you look down, I have sold this company called Kfin Tech. Now Kfin Tech was actually doing really well, but I sold it on Jan 20th. Now the problem with Kfin Tech was it was falling quite drastically without any sign of recovery. And the problem is, even on a technical standpoint, it fell. And I had even put a learning saying result might be good, but the stock kept falling without any sign of recovery. And in fact, after that, Kfin Tech's result came out much better. And the stock actually went up, I think 6% that day, but immediately after going up, it again fell down. And that is a flat sign of recovery, right? And the price I sold it for was 1150, and right now it is still below the selling price at 1103. And what I did was I removed Kfin Tech, right? And I added Varun Beverages. Now, why did I add Varun Beverages? Two reasons. One, I wanted a large cap to actually make this portfolio quite balanced, number one. And number two, I also wanted it also fit in my consumption story, because I knew consumption would come back, right? I was playing for that on Jan 20th, and that is why I took Varun Beverages. And in fact, I think that was a good call, because if you see Varun Beverages, that's gone up around 4.5% today, and it fits in the consumption story because a lot of disposable income has been unlocked in India as of today. So both of this actually played out. Now let us look at how our portfolio fares with the index. Now, if you look at the index, right, we have Nifty 50, Nifty 500, mid cap and small cap. So ideally, I would benchmark this with Nifty 500 or the mid cap and small cap index, mainly because 99% of our stocks are small cap and mid cap companies. Only one stock is large cap, which we added on 20th Jan. Now, usually what happens is when the index falls down by 10, 15, 20%, your portfolio will fall out obviously more. And same way, when it starts going up 10, 15, 20%, your portfolio starts going up higher. This is because your volatility of your portfolio to the index or your stocks to the index will always be higher than the index. So for example, if you see the Nifty small cap index, it has gone down by almost 10% since Jan 2nd. And my PF has gone down around 21%, actually 23%, because 21% is what it is down today. Add the minus 1.78 that I've booked as a loss, right? So now totally my portfolio is down 23%. In fact, if you see in the past, it was down much more, and I'll show you what I've done there as well. So overall, if you see, Nifty 50 has been very strong because HDFC Bank has been holding it, but it has also not fallen on, but it has also not gone up. whereas small cap is something that went down to almost 20% and has recovered 10. So our portfolio also was at minus 30, came up to minus 21, and I think in the next 6 to 8 months it should recover completely. So I'm not too worried about that as well, right? If you look at our MOM tracking, I've updated this sheet also. By the way, for all the people who are in the community, you get this sheet. Okay, so don't worry about that. Now, if you look at this, we have not beat the index in the month of Jan, but we have around 12 months to go. So hopefully we will, not hopefully, we will recover it. And our PE of our entire portfolio has come down to around 36, whereas the Nifty small cap PE is sitting at 30. So we're quite close. Yes, there is still some froth in our portfolio, but it's quite close over there. Another very important thing, I think, for all the people who have this Excel sheet, I have started logging everything, right? For example, what has happened in the month of Jan. Now, obviously, in December, I will not remember what happened in Jan, but I'm keeping a complete log. For example, in Jan, dollar index became stronger in the start. Markets fell after 2nd Jan. Max drawdown 11%. In the start, my portfolio had only fallen down 11%. And then the bleed continues. So, and then we saw Kalyan Jewelers issue happening. Right now, Motilal Oswal is sitting at 14p. Right now, it's fallen even more. Removed Kfin Tech today. So I have made a detailed summary of what I feel has happened in the whole month of Jan every single day. And now we have started the Feb. So this is what I've just put on Feb as well, that the budget is consumption focused. We knew this would happen, but didn't predict the small fall. IT slabs change. Aspirational India gets 1 more lakh to spend. So now we have to amend our entire portfolio or change the entire portfolio in such a way where we have to now manage it more efficiently. Now, yes, there will be a change coming up in the next few days. I will be doing a change. I'm still figuring out how to actually do it. I have two options. One is we're planning to remove two stocks in this, reduce the dependency on AMC companies, remove two companies and add two more companies which are now focused on the new aspirational India. That is number one. Number two, I'm also thinking that I will remove two companies, but use some of the money to rebalance, reinvest the money here so that my averaging becomes a little better, and then use another company to start pushing it upwards, right? Again, just strategies, still thinking, not confirmed on the strategy or the thought process yet, but I still have time. So mostly around Tuesday or Wednesday is when I would be rebalancing it, and the minute I rebalance, I will put it in the community section for all of you guys to look at. But right now, for all the other people who are not a part of the community, this is how the PF looks like right now, minus 21%. I am not worried, I am not scared, right? I'm down 10 lakhs, but you see me, I'm still smiling, I have no problem, because I know this will recover. What goes up must fall down, what falls down must go up, and we've started going up right now. It's just a matter of time. And when your FIIs start entering the market, which they will, in my opinion, in the next 1 month, FIIs to start coming back, looking at the consumption growth story, or maybe they would come around April, because this new budget taxation will kick in April, right? Where your money in the bank account will be more and the consumption will start boosting. So April to December is when we will start making a lot of money in our portfolio. So hopefully, let's see what happens. The market is the ultimate king and ultimate god, right? We cannot predict the markets, but we have to just move along with it and plan our portfolio accordingly. So that is the thought process we have. So that is the update for Jan 2025. And when Feb gets over, I will do that. And this is going to go on for the next 12 months. It's a lot of learning for people who are here, a lot of understanding for people who are here. So let me know in the comment section below if you have any more questions, any more doubts, and thought process of this community and of this entire process as well. If you want to keep updated with the latest trends, you can join my YouTube community and I will give you more updates there. Awesome. This is me, Shashank Udupa, signing off. Take care. See you guys. Bye.